Are you searching for promising growth stocks? Here's a little secret. The longer you hold on to the right ones, the greater the potential for significant returns. As legendary investor Benjamin Graham once said, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." This means that while stock prices may fluctuate wildly in the short term, a company's true value eventually becomes evident. With that in mind, let's dive into two remarkable growth stocks that have strong long-term potential, stocks that could prove to be valuable additions to a long-term portfolio. First up is Lam Research, ticker LRCX. You may not be familiar with the name, but there's a good chance that the technology you use daily depends on its products. Lam Research is a critical supplier to the semiconductor industry, providing the software and precision equipment necessary to manufacture cutting-edge silicon chips. At one point, semiconductor manufacturing wasn't as complex as it is today. However, as technology advances, the demand for more powerful and efficient chips continues to grow. Improved manufacturing processes are now essential for meeting the increasing demand for better performance in smaller, more efficient chips. Lam Research plays a vital role in this transformation. The company generates around $16 billion in annual revenue by providing etching, cleaning, and measurement solutions that help semiconductor manufacturers push the boundaries of what's possible. However, like many companies in the semiconductor industry, Lam Research's revenue can be cyclical. The stock faced challenges over the past year as demand fluctuated, but taking a step back to view the bigger picture tells a different story. The world's dependence on semiconductors is only increasing, especially with the rapid rise of artificial intelligence, automation, and cloud computing. Each generation of chips must outperform the last, making the precision equipment that Lam Research provides an essential part of the industry's progress. As one of the few companies capable of delivering these advanced solutions, Lam Research is positioned for strong long-term growth, making it a compelling option for patient investors. Next up is Wolfspeed, ticker WOLF. This might not be a household name either, but don't overlook its significance. Wolfspeed is playing a crucial role in advancing the next generation of high-performance semiconductor materials. Unlike traditional silicon-based chips, Wolfspeed specializes in silicon carbide solutions. What's the big deal? Well, silicon carbide has superior heat tolerance and can handle higher voltages compared to regular silicon. This makes it the preferred material for high-performance applications, such as electric vehicles, data centers, renewable energy systems, and EV charging infrastructure. While the use of silicon carbide isn't entirely new, its potential is just beginning to be fully realized. As more industries transition to higher efficiency energy solutions, the demand for Wolfspeed's products is expected to surge. Global Market Insights predicts that the worldwide silicon carbide market will grow from $4.2 billion in 2023 to a staggering $80.2 billion by 2034. That's an incredible growth trajectory, and Wolfspeed, as one of the largest players in this space, stands to benefit significantly. Despite its strong potential, Wolfspeed isn't yet a fully profitable company. However, analysts believe that as demand for its products continues to rise, the company will eventually turn a profit. The current consensus price target for the stock is around $9.70, which is roughly 76% higher than its current price. While short-term fluctuations are inevitable, long-term investors who are willing to be patient could see substantial returns as Wolfspeed cements its position in the silicon carbide market. Each of these stocks represents a different level of risk and reward, catering to different types of investors. If you're looking for stability, Lam Research offers strong fundamentals. And if you're willing to bet on the future of chip materials, Wolfspeed could be a long-term play worth watching. The key question is, which one aligns best with your investing strategy? Let me know in the comments. If you found this video helpful, be sure to like and subscribe for more insights on investing and building wealth. And remember, this content is for informational purposes only and should not be considered financial advice. Always do your own research before making any investment decisions. Thanks for watching, and we'll see you in the next video.